Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar's 646th video. Traders, this video is being filmed on October 20th for trading October 21st, and it's a view looking forward. Tonight, we're going to try something slightly different. I'm going to bring you directly into my chart world. Traders, futures trading is risky and can cause substantial financial loss. Be very careful if you're going to play this game. Make sure you use your stops. But I would like to show you something that I have been working on. Traders, the chart before your eyes is the weekly NASDAQ. What I have come to do in my years of analysis is when I reach a point in a market where the daily analysis, which I usually rely upon to be a daily day trader, a swing type of day trader, if the analysis on the daily reaches a point where for days on end it becomes so tricky that really good-looking sell calls become buy days and buy calls become sell days, I start to step back and I go to my weeklies and my monthlies, because what's usually happening when analysis gets funky on you, if you're a decent analyst, is that the market is morphing or moving to a new level. And as it blasts out of its area, as you can see the flat right here that we've had for a little while, as it gets past this area and it starts to move into new levels, of course the analysis on daily charts doesn't work for a little while, because what you'll get is you'll get sell signals as your indicators get pinned, and you'll get little bars that'll form at the top, or what looks like a top, and you'll get a sell signal on that. But it's one of the times where, unlike this time here, the market actually is going to break out and start to run. Now, I think that is the situation that we have here with our markets, especially here in the U.S., certainly the FTSE as well. Traders, so what I've done is I've stepped back out of the dailies and I took a little tour on the weeklies, and I'd like to take that tour with you right now. If you'd indulge me, come on a little tour, and we're going to look at some indice charts, weeklies and monthlies. What you'll note right here, traders, is that we're looking at the NASDAQ weekly bar chart. Very interesting. One thing is that it is above the 200 bar moving average, but way above, weeks and weeks above it. What's really interesting past that is that you've broken out of a major resistance line on the weekly and have formed some sort of a parallel channel on the way up. That is a true breakout. When you get above resistance in a parallel fashion and start to run, especially with the buying that we've seen lately, that is a breakout. So the weekly NASDAQ, which is absolutely one of our leaders of the S&P, has broken out above its 200 bar moving average a while back, and it is now above a major trend line resistance line, which will become support if in fact it gets tested. The likelihood is that it'll test down to the support and then hold the support if it's good, and away we go. That's if it even bothers to do a test. For now, we're looking at a weekly NASDAQ with an absolute breakout of resistance in a smart-looking bullish parallel trend. The next leader we're going to look at is the Dow Jones Transportation Average. Dow Jones Transportation Average, traders, above the 200 bar mover, above the 200 bar. And look, the leader has broken out above our major resistance line. So the leader, Dow Jones Transportation Average, and the leader, the NASDAQ, both well above the 200 bar moving average. In this instance, the NASDAQ did it about 3 weeks before the transportation average, but both leaders well above the 200 and certainly now above major resistance. Now we're going to look at another leader, but this time it is a leader out of Europe, the FTSE. Traders, the FTSE weekly bar chart, it is above major resistance inside of a parallel channel, which you can actually take another one. There's a smaller one forming right here. So you basically have two parallel channels. Both are bullish, but the important thing is that you are above this resistance line. Very, very interesting that now the world leaders of indice markets are above major resistance and all well above the 200. So the leaders are doing really well and look bullish, and traders, you have to call this a breakout. Now let's go look at one of the followers, the Dow Jones Industrial Average. The Dow Jones Industrial Average, traders. Look at this chart. Let me enlarge this slightly. We're above major resistance, but it's one of the followers. And what you'll note is that the follower just this week has gotten above the 200 bar moving average. It is very important, this 200 bar moving average right here. Most of the serious professional fund managers out there closely watch the 200 bar moving average. Testimony to that. Last time we got up here, sellers came out of the woodwork. Then when we got up here again, sellers came out of the woodwork, creating this resistance trend line. This time around, if you'll note, the leaders got well above the 200, and now the follower, the Dow Jones Industrial Average, just got above the 200. Now, let's go look at the S&P. That's the one that we trade. Is it above the 200? The 200 is here. It is well above the 200 bar moving average, one of the leaders. And of course, a lot more above the resistance line than the S&P. Then we look at the transportation average, another major leader, if not the major leader of all U.S. index markets. Transportation average well above the 200 right here, and is much more above the resistance line. It's one of the leaders, than is the S&P. Now let's go look at the S&P. A follower. The follower is not above it yet, but if it's going to do its job and follow its leader, and follow the leader is a game we all know how to play, it should end up here somewhere. The S&P should run. It should get above the 200 bar moving average. That is my take on the weekly charts. They are above major resistance. They're now above the 200 bar moving average in every instance I've shown you except for the S&P, and that is a follower. And it's apparent that the follower is going to get above that. Now, traders, I basically took a sell signal for Wednesday on the daily chart because it was, for any analyst that understands indicators, intermarket analysis, and the analysis of the S&P, it was basically a very strong sell signal for Wednesday. And lo and behold, after a dip, the buyers came out of the woodwork, which they've done on every dip since this rally started. And this is weeks ago now. We're talking September, the beginning of September. Actually, if you really want to think about it, the rally started in the beginning of July. By September, it really began to pick up some traction, and now it is starting to go. So now that we're in October and the markets are looking strong and not becoming Rocktober, they're not being rocked this month, I think that this follower is going to follow the leader. So we've looked at the weekly charts. The next step is to go look at the monthly charts. So now we're going to go to NASDAQ again, and then we're going to convert it to a monthly chart. Here's your NASDAQ, the weekly that we've already seen. Let's take this out to a monthly. This is the monthly NASDAQ bar chart. Interesting things going on here on the monthly. First of all, you're in a very well-defined parallel channel, and on a monthly, that is a trend, that is not a mistake. A monthly, each one of these bars takes an entire month to create. If you are moving in a trend on the monthly, it is a trend unmistakably. Okay, the monthly this month has gotten above the major resistance. The monthly is above OTAPMA, Omni Trading Academy's proprietary moving average. The NASDAQ is above our OTAPMA by 4 months. The NASDAQ is 4 full months above OTAPMA. It is a leader. It has broken out above major resistance, and it is in a nicely defined parallel channel. The height of this channel, if we were to touch it, is 2307 on the cash NASDAQ. Let's go now look at the Dow Jones Transportation Average, another one of the leaders, on a monthly fashion. Dow Jones Transportation Average monthly bar. Traders, look at this. This is our OTAPMA, or Omni Trading Academy's proprietary moving average. It held it's been holding for 3 months now, really 4 months if you want to count this, and it's been holding the parallel channel. So the leader of U.S. indices, the Dow Jones Transportation Average, has held our Omni Trading Academy's moving average, is in a very smartly defined parallel channel. Remember, it's the leader, and is above monthly resistance. So the NASDAQ absolutely has led the parade the last few weeks, well above the OTAPMA and in the parallel channel and above its resistance. Then the leader, the Dow Jones Transportation Average on the monthly, well above the resistance and certainly 3 to 4 months above OTAPMA. Let's now go look at one of the followers, the Dow Jones Industrial Average. The Dow Jones Industrial Average and the S&P, basically it's like Papa and son. The Dow Jones Industrial Average is the S&P's father, so to speak. And if we look at the father, the Dow Jones Industrial Average on a monthly, it is a follower. The follower for the first month just got above. The first month, it is above OTAPMA. Meanwhile, you had 4 months above in the leaders, NASDAQ and transportation. So if the follower just got above OTAPMA for the first month and is now above its major resistance, if a follower is to do its job and follow the leader, it should do this and start to move higher, following the leader. Remember, the leaders have already done it. NASDAQ and tranny has already done this, which means the followers, and if you look back at charts over the last 50 years, you will see that the S&P and the Dow follow the tranny and the NASDAQ, or the NASDAQ hasn't been around that long, but the tranny certainly leads around the industrial average. So the S&P and the industrial average stay together, and they are basically on the monthly in a parallel channel, and just now getting above OTAPMA and just getting above major resistance. That tells us that fireworks should be flying in the next months to come. Let's go look now at the S&P. That's the one that we like to trade. This is an S&P monthly coming your way. Okay, S&P monthly bar, not above OTAPMA yet. Traders, look at that. It is not above OTAPMA yet. That's exciting. That means we absolutely have room for the follower to get up here, get above OTAPMA, and it is certainly now just beginning to get above its major resistance. So it's not as above the major resistance as are the leaders, and it's not above OTAPMA as its leaders are, but if it's going to play follow the leader, as most good following markets do, it will be above this level very shortly. Traders, after doing this analysis this evening, I have no choice, but the assessment that needs to be made here is that we need to buy every big dip, no matter how scary it seems. This seems to be a new leg or a new wave of this market coming our way. And when it does come off, no matter how good the technical signal is or how bad the news is, broad-based buying comes out of the woodwork. With that in mind, we have no choice but to go forward and buy these dips. Yesterday's sell signal, again, if you are a good technical analyst, and certainly if you're an Omniac, you would recognize yesterday as a full-fledged sell signal across the board in all the U.S. indices. And it did not go down. In fact, it went up with a vengeance. That means that when you get a day down, expect buyers to come in. That also means, from my experience over the last 28 years, we're in a bull phase, and that's how a bull acts. It starts off low and works its way higher by the end of the day. It starts the week off low and works its way higher by the end of the week. The weeklies and the monthlies I am showing you here are proving that it is time for us to somehow put our blinders on this sell signals. Difficult decision to make here, because as of yesterday I showed you this picture, and believe it or not, this picture, traders, is basically very scary for me. This will be one of the rare times in my analytical career and trading career that I'm going to buy through something that I would always sell into. This is a daily chart of the S&P. This is a huge head and shoulders, shoulder, head, shoulder. We all know it exists. All the analysts have been screaming about it that believe in the head and shoulders for the last few, and certainly us Omniacs have been watching it. Now, I have been bullish all the way through this head test right here, all the way through, expecting that we would come up and have the head test. At the same time, I fully expected when we got here, we would break severely, which is what happens when you have a shoulder, head, shoulder, and you get the head test. This is the head test area, which is generally the middle to the top of the head and shoulders. You expect it to come out of the right shoulder, do a head test, fail, and follow this red line. Then your projection from the head and shoulders comes true. That's what I'd normally expect when I see a big head and shoulders like this. This one went up and hit the head test, and I immediately yesterday said, head test, it hit, it dropped, it's time to go short. Well, traders, that was not the right move because once again, one day down, buyers came out of the woodwork. And boom, it went straight back up. So now I think the only course of action is to ride this elevator and expect it to go straight through the top of the head test area, or at least reach the top of the head test area somewhere up here. So I would normally sell into a move like this. It's what we did on Wednesday. It did not turn out to be a fruitful day. I think it's time, because of the weekly that I just showed you and the monthly, and I'm going to flip back to the monthly. In all of these indice charts, negates that head and shoulders and tells us be brave and only take the head and shoulders if that head test actually fails. So the course of action that probably needs to be done here in order to stay long through this very scary area is to look at this head and shoulders, look at this head test and say, you know what? Until it actually fails, let's not call it a head test at all. Let's just see if it's going to play up here for a little while and continue on its merry way. That's how I believe we're going to have to handle this area. Thank goodness we're day traders. We can flip back to bearish as quickly as we need to. But using the normal signals that would tell you on a daily bar chart to go short seems to be negated by broad-based buying. For now, let's keep our eyes on the broad-based buying and buy into these dips. Again, we can change if it becomes necessary and start selling into it. Traders, I hope this vision right here helps to keep things in light or keep things in focus for you as to where the broader picture is. I know it's easy to get knocked off your kilter when you're looking at the daily charts and you see how bearish they can look. But when you zoom back a little bit and take a look at the weeklies and the monthlies, it'll give you confidence in the decision to maybe not take the sell signals after all and just look at buying the dips. Traders, do your own homework, pull your own charts, never listen to anybody else's opinion unless it matches your own homework. Traders, thank you so much for coming to this class. We much appreciate you coming here. If you like what you see, please come to my website. It's www.livewithoscar.com and join me in my free trading rooms. Traders, try to keep your emotions out of trading. Make sure you use your stops. Always place stops first. And do the best you can to keep your emotions out of your trading decisions. One of the best things you can do to help yourselves with that is to say this to yourselves over and over again, and you know what that is.
Stops are in. Emotions are out.
Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.